Did you guys know that SoFi stock is already up over 60% in just the last month? This was greatly helped because our Q4 earnings results saw a double beat. But I want to go through and look at all the extra details that I've been looking at before we actually get our 10Q, and then I also want to touch up on a couple of other new, very exciting things in SoFi's future. We have 6 very amazing topics, so let's not waste any time and let's jump right into it. So jumping right into it, I have a graph of all their products, including their members, that we are going to go through. Now, as you can see, this is the latest quarter, Q4 of 2020 right here, and then all the other quarters this year, and I also included Q4 of 2021 and 2022. Now, I have every single quarter in here possible since they've been a public company, okay? The only reason why I'm actually reducing it down is just to keep it as simple as possible. And, you know, the only problem with that though is the quarter over quarter numbers here are actually for Q3 of 2020. So just disregard those numbers on the Q4 2020 side, is that they're actually not right. It's actually for the quarters going previously. That being said, however, whenever we actually look at members, amazing add of 480,000 members, okay? It actually doesn't pale in comparison to last year in Q4 of 2021, where we saw almost 523,000 new members. Unbelievable. But that's also just because we spent a lot more on sales and marketing, and so we actually did a lot more outreach back then. As for our products, it's still absolutely amazing, almost 700,000, but obviously we would have preferred 905,000 like we did see last year. But like I said, there's always an expense to these things. Lending, absolutely amazing quarter, 60,000 new ads, 53,800, which you can see down here, all personal loans. Home loans and student loans, an absolute disaster. Home loans, you know, count this product out for now until we actually have a new home loan provider. Right now we're using lower.com from what I can see, and that partner has actually changed up their ways in flipping the bill onto SoFi. So we hate that. We're either trying to build our own systems internally or we're going to acquire out. They haven't quite figured that out yet. Regardless, it's going to be some time. Financial services obviously did well. We'll break down what financial services products actually did the best. But aside from that, our tech platform actually, whenever we look across, had the worst quarter in terms of growth, you know, in these quarters that we're actually showing. And now there is a reason for this slowdown. It's because a lot of new fintechs and these sorts of things are just absolutely getting no VC funding, which means they can't afford Galileo and Technisys, right? So, you know, there isn't a whole lot of new competition. However, we are looking for new institutions to go after, and we're looking at big institutions, you know, like the Wells Fargo and the Citigroups of the world, to try to add on these players, which could absolutely, you know, triple our members if needed. But skipping along into the actual individual section, we already spoke about all of these loans, okay? They are doing well, especially in the home loan area. Oh my gosh. And then hopefully whenever the 10Q comes out, we'll be able to see the interest rates that we're earning on those, you know, the FICO scores that we're getting on those people, and then, you know, every single thing, all the loans we're selling. I want to see it all. We don't have that information yet, but in a couple weeks, what they're saying, then it'll be released, and then obviously I'll make another video on that. But for now, we'll just work with what we have, okay? SoFi Money products, absolute killer product. It's doing amazing, unbelievable, over 2 million users. And Invest products also doing amazing, 91,000, not nearly as good as SoFi Money, because it's that 3.75% interest that people want, and then that can also fund our deposits. So it's actually sort of in tandem. A little bit of SoFi Money actually makes our loan portfolio better, which is really where we make the bulk of our, you know, actual earnings. Now, as you can see, over the quarters, there's actually been a big decline in credit cards here. However, we're starting to see a, you know, uptick again for credit cards. I am such a fan of the credit card business. I've said this plenty of times, and I'm really, really excited that hopefully the growth continues there, and potentially even we see some premium cards. I would love to see that. Pagaya loans, 4,000 that we're only sending over to Pagaya. This is probably because the average SoFi Money user already has 745 FICO scores, which means they're an absolute amazing target to actually cross-sell over into our personal loans. So we don't even have to send very many over to, you know, Pagaya, because, well, we can actually sell them ourselves. If you don't know the Pagaya partnership of the referred loans that I'm talking about, pretty much it's just the people that we can't actually, you know, hand a loan out to because they're too risky. We actually send it to this marketplace where there might be some higher, you know, subprime borrowers that will actually, you know, end up borrowing to these individuals. We actually just take a little small fee, which is a lead generation fee, for sending the client that way. SoFi Relay saw the biggest improvement by far. Okay, 321,000, absolute unbelievable for quarter for Relay, and it actually is becoming a little bit of just a simple budgeting tool for why people are starting out with SoFi. But that also means it's a great way for people who are using Relay as a way to cross-sell them into SoFi Money, then SoFi Invest, and then potentially get them into our actual lending platform. That's the sort of way that we can get them on. So if even SoFi Relay is the onboarding system, which we thought it was SoFi Money, now it could be SoFi Relay, it's still a very cheap way to get people on, and then obviously that flywheel continues. SoFi at Work. This is our corporate group selling package where we do, retirement savings, lending, helping people with their student loans, all sorts of corporate benefits. It absolutely saw a great quarter, 7,600 new applicants added on. This could be from existing partnerships or from new partnerships that we're, potentially getting. They don't cover this product nearly as much, probably because it's not a big revenue add for us. But that being said, it still is great seeing how, the trend has grown over time. Like, just look at this. It's just continues to climb. But that is all of our products in big categories, okay? The problem is that I'm a very, analytical person. I want to see SoFi invest in all of the sub-products within it. Like, how many people are actually buying our ETFs or actually have a margin account or options or pay in for or, crypto products? I want to know all of these things. Obviously, they don't show that all off. They just sort of clump it into, SoFi Invest. But if I could actually look into that, that's sort of how we can see how our average revenue per user is climbing, even though, SoFi Invest, the actual product numbers aren't actually growing. I mean, they are growing, but they can also grow internally. Like, one person could buy stocks and they could also have automated investing and all the other things that I have listed, which could actually increase our revenue, but yet there would still only be one account. And considering the fact that our average revenue per user on our financial services went from $21 per person up to $40, it's an absolute massive increase, and it's probably due to that exact reason. But let me cover a couple reasons for why this stock might actually be going up finally. The first reason, and probably the most obvious, is simply that obviously we are seeing growth in our revenue, and that is great, okay? But it's really the profitability that's really, really exciting. I show this category, the total net difference, okay? This is something that I like to throw up, where you could see 2 years ago, only, the actual amount of revenue that we brought in, half of that, over 49% of that actually ended up being losses, okay? And then, as you can see, as we've slowly went on over time, that this is slowly improved. As we have actually gotten to $456,000 in revenue, we're only losing about 40 million. And that's actually non-cash charges as well, but that's for another video, right? But pretty much it means that our cash burn is not actually real. We are actually adding more money every single quarter, so we don't have to go externally for our growth, okay? We are actually profitable, but the problem is things like $70 million in stock-based compensation is actually a hit to our, total income or our net income. So even if you were to just take out that 70 million, we've already just made net $30 million this quarter, and that's not the only non-cash charge in there. But look how cool this is. Back just 2 quarters ago, okay, you can see how bad the EBITDA numbers were. They were even getting worse. And now, ever since we've had a bank charter, it's increased by 89%, then 133%, 120%, 58%. This is quarter over quarter. Those types of compounding effects really does show you the power of the bank charter, right? And so this is hopefully going to continue going forward. Look at this number as well. I'm also, showing off customer acquisition costs, where you can see it is climbing. Luckily, we saw a little bit of a decrease going from Q3 to Q4, so that was very good. And hopefully we're still able to keep up the quality of the member that's actually joining. But aside from that, you know what? This seems to be worrisome for people. I would worry more about the EBITDA numbers and everything along these lines. The growth rates are unbelievable, and if we are attracting good members, it doesn't matter the cost of how we got them if they're actually, returning it tenfold, right? And that's really what we're seeing on our personal loan side. I don't know how they're finding these amazing clients with 165,000, net incomes and FICO scores above 750, but what they are achieving is high interest rates, and people are paying it, keeping the default rates low, and that's allowing us to profit greatly. Another reason why the stock might be rising is for 2 reasons about the Fed meeting that happened on February 1st. One is because obviously 25 basis points is exactly what the market wanted to see, so that was very bullish. So most stocks in the stock market actually went up due to this fact, and that was very exciting, especially growth stocks. Another reason is that this 25 basis points is also what SoFi had projected. So if we continue to be right about our projections, then that means that our forward guidance can actually come true. Let's also remember the frequency at which SoFi actually beats their own guidances as well. It's just off the charts. But anyway, let me jump into the next slide. Okay, so there's some amazing things on this page that I want to show you guys. First off, the reason why there's a lot of blanks here is because, well, we don't have the 10Q, which means that I won't be able to actually get this until we have that large financial statement. You know, the 300 pages of boring analytical stuff that I go through for your pleasure. But we do have a couple numbers here. One is the actual loan loss provisions, which excitingly enough actually lowered quarter over quarter. It wasn't the first time it's actually lowered and then spiked up, so don't get too excited. But it lowering a little bit is, you know, it's exciting. I mean, I love whenever it goes down because they're expecting to actually keep more for themselves and that less people are going to be defaulting. A little bit higher up, you can also see deposits right here, which is absolutely stunning. You know, it's a ton of amazing, like in 4 quarters, us having, you know, the bank charter for essentially 1 year. It's not even been 1 year, right? There's an additional like 15 days or whatever, but 1 year where we already have gotten to nearly $7.3 billion in deposits. The interest rate, as you can see, is expected to climb higher and higher, so we will actually be paying more for it. But I also added 2 new categories to this sheet right here, which is the total loan portfolio and then the actual deposit coverage. So how much of our actual loan portfolio is being covered by the deposits that we actually have on our balance sheet. What you guys can see here is that whenever we first started, it was only 6%. And just in this little year, okay, it's already reached 52%. And in that same breath also, our loan portfolio went from 7 billion to almost 14 billion, a doubling in the matter of a year. Sorry, I keep clicking that. So that is so exciting, and also probably what Anthony Noto means by, you know, we're nowhere close to the amount of deposits that we want. First off, they can practically double before we even cover our current loan portfolio. And then hopefully if that continues to grow out as we want it to, then, you know, obviously we'll need more deposits and everything for that. And hopefully, you know, we're getting that from new direct deposit users and people continuing to add to their savings. And then hopefully the overflow of savings, we can actually, you know, get them to our SoFi Invest products and these sorts of things. And that's sort of how the flywheel, you know, continues. But let me go on and show you guys another new slide that I've actually added into this, you know, big Excel sheet that I've been working on for SoFi to find everything that I can out about this business. And this one actually I find very exciting and hopefully grows out and be a lot more exciting as we get more data. But let me see what I can show you guys. Boom. Okay, this is my diversification sheet, okay? So as you can see, what it does is it's separating all of the lending, technology platform, and financial services for all of the quarters that we have, okay? And then it's giving us a chart on the breakdowns of all of those for every single quarter that we have. As you can see, in Q1 of 2021, our financial services made up roughly 3.2%. As we go on, you know, further on, 8.2%, this one, 11.2%, then finally 13.5%. Unbelievable. Super exciting. And funny enough too, if we go back to Q1 of 2021, lending platform, you know, 73.8%. I think some of these are actually higher. Yeah, 77% is probably the highest it gets. And then, you know, in the quarters that we are at now, it's more like 68%, which is not maybe as fast as I want the diversification to happen, but obviously our technology platform has been going through a, you know, a turbulent time. At one point actually doing 22.6%, then 2 quarters later, only 17.9%. That's obviously the wrong direction. But I wouldn't count Galileo and Technisys out just yet. I mean, obviously the diversification is showing some bad signs and they are still growing. It's not like they're shrinking. It's just other businesses in SoFi are growing even faster. And so it's making a smaller pie, which is so funny, right? Like that is such a good problem to have that our other businesses are absolutely exploding so that it makes one of them look like it's doing terribly, but it's still doing good. The growth in Galileo and Technisys comes in 3 waves. This is so important to understand. These banking partners are wave 1, okay? That's whenever we bring on the partners and we actually start to get their, or, you know, our systems onto their platform and actually engage. This takes a little bit of time because obviously the bigger the business, the more custom that we're going to need every single niche and product, okay? Whenever we're actually selling to very small businesses, we can just send them a Lego-like product and just go, hey, you know, Shopify, build it yourself, you know, that sort of idea. But whenever we're actually doing the Citigroup approach, we need more of like a Palantir, surround them, figure out their business, and then give them a very custom niche product. Then wave 2 happens. This is whenever Citigroup, for example, because I'm just using them as an example, and actually, they're not even really a client of ours or what we know of yet. Then they will go out and maybe say offer a new card or say, hey, we're switching cards to this new provider. First, go over and sign up for our new cards and you can get yours today. This is the onboarding or enrolling section of our business whenever the issuing institution is actually selling our product for us. And then lastly, it's after everyone starts using the product and getting it into their actual regular routine, for which we then start to actually make revenue. So this is the big thing that always, Anthony Noto and Chris Lapointe always like pointing out, is that these are, few forward indicators of multiple success. Whenever they say that they've signed new clients, we are far away from new revenue. Whenever you see new accounts, we're closer to revenue, but not quite even at revenue, okay? And then going forward after that, then we actually start to make our money. So in those 3 waves, it's extremely important to know that Galileo has added 11 new partners this quarter, and Technisys has added 16 new partners. And then whenever we're talking about Galileo's 11 new partners, 9 of them are already established, mature organizations who already have large client bases. They did not touch on at all if these are bundled clients or completely separate 16 and 11, if none of them actually intertwine, which would actually be the best, because then it would allow for multiple bundling in the future. But even if they are cross-sold, I mean, that's amazing, because that's really showing the actual benefit of the AWS of FinTech actually potentially selling these clients. There's going to be a lot more information from these sheets whenever we actually do get that financial statement, the 10Q, right? So make sure you guys subscribe down below and hit that bell so then you're the first to know why SoFi stock is actually going up.